Hi members, my name is Mitchell Sneddon and I'm joined here today by Peter Hall, founder of Hunter Hall Global Value. Now, Peter, last time you were here doing a presentation to your shareholders, and I think it was titled "Only the Paranoid Schizophrenics Survive." That was to do with the landscape that we were operating in. You're back doing another roadshow today. What's the title of this one? And how has the world evolved since then?
I think the title could be, we don't actually have a formal title, but the title could be A Possible Return to Reality. And what I'm really talking about there is that we've lived in this unreal world of very, very low interest rates, which has caused massive increases in the valuation of the three major asset classes: bonds, equities, and property. And what we're starting to see now is a shift and a change from that regime, which we've had for the last 8 years, to a new regime. And some of the signs of that change are, one, interest rates have bottomed and are possibly starting to rise. If you look at LIBOR, London Interbank Offered Rate, that's started to go up, and the German bonds have started to go up. The German 10-year bond is going up. And secondly, we're seeing significant political change in Europe. Brexit was the first really tangible example of that, but all over Europe, change is happening. The Five-Star Movement, Italy's got the mayor of Rome. Alternative for Deutschland is threatening Angela Merkel. Marine Le Pen is rampaging through the polls in France, and François Hollande is at 4%. And of course, in a couple of days, we'll find out if Donald Trump has beaten Hillary. But the fact that Donald Trump has come so far means that his agenda is really a very popular agenda, and it's going to change behaviour amongst politicians.
Right, now let's stick with the subject of Brexit. You actually live in the UK. What have you seen on the ground there impacting markets? It's interesting that now, we were speaking a bit off camera before, you were saying it was once viewed as a negative thing for the economy, and now it's actually the economy, the outlook has increased significantly.
Yeah, it's very interesting. Before Brexit, all the economists were saying there's going to be, if Britain votes for Brexit, there'll be a massive decline in economic activity. And now they've had to increase their economic outlook. They went from a big decline to plus 0.8%, and now they're looking at plus 2.1% for next year, which is, pretty good given the dislocation and the shock that's happened. And I think what's going on really is that the British people are feeling much more exuberant and confident about the future because they don't have to worry about uncontrolled mass immigration. Immigration was the issue that really drove Brexit, in my opinion. Britain won't have to fund the massive catastrophe that's happening in the European banking system with the Deutsche Bank and with the Italian banks and all the spread effects of that. And Britain can go back to its historical role of being ruthless and brilliant pirates, And it's interesting to see the people who voted for Brexit, like Morrissey from the Smiths voted for Brexit, Ringo Starr voted for Brexit, Keith Richards, I think, is a keen Brexiter. So it is really quite interesting. And what happened when the Brexit vote result came through, the next day we bought tens of millions of dollars worth of British shares, and one of them was a company called Foxtons, which is the leading residential broker and letting agent in London, and that's a stock that I think will go from its current price of about £1 to £3 or £4 in the next 5, 6, 7 years, kind of thing.
Excellent. Now, sticking on the portfolio of HHV, it's very gold heavy at the present time, and a lot of resources in the portfolio, resource exposure. I presume, seeing that the gold stocks are still there, St Barbara, Doré Minerals, you're still quite positive. Your outlook on gold is still very positive.
Yeah, there's some macro factors which are very important. One is that gold is the currency you cannot print more of, so its relativity to paper money is improving all the time. And particularly as I can't see how governments get out of their fix of having huge debts without more money printing. So that's an important thing. And demand for gold is rising as interest rates are low. And I think interest rates are not going to break away. They're going to stay relatively low. And there's a micro issue, which is that I think in Australia, there's probably a wave wave of consolidation is going to happen for the more small and mid-cap gold miners, as people do what Northern Star have done and which Robert de Crespigny did, a couple of decades ago, where you consolidate a number of producers and you get a 1 million ounce producer and you get the re-rating. So what we've done is we had our investment in St. Barb, which was very successful, and we've recirculated that money and bought shares in a number of other small and mid-cap gold miners, which will go on and develop their businesses, and they may end up in a consolidation of some sort.
Speaking of your gold exposure, one thing that investors might query is, considering your ethical investment stance within the portfolio, how does the gold mining aspect of it fit into that ethical investing?
Yeah, I mean, that's an issue that our investor base has asked, and it's something we take very, very seriously. So we have never been against mining, because my view is that with mining, you go in, you take the material out, and you remediate the landscape, and there is no permanent damage done. There may be a period of time, 10, 20, 30 years, where there's disturbance of the environment, but at the end you can return it to its former state and remediate it, particularly in jurisdictions where you've got good governance. And the thing I like about Australia is A, the good governance, and B, the landscapes where you are disturbing habitat and the environment are fairly low biomass landscapes. You're deep underground, on the surface it's a desert, that kind of thing. There are a couple of cases in our portfolio where there are gold activities happening in high biomass areas. So Simberi Island in Papua New Guinea is one, and I have to say Bidel Resources in Brazil. So we've made our investment in Bidel, and we are continuing to research the investment, and of course the company have assured us that all the best environmental management is happening, but I really need to go to their mine in northern Brazil to assess the thing on the ground. I haven't had a chance to do that. If we find out that it's not operating in a proper way, we will sell the holding. So we have to be true blue in terms of sticking with that environmental thing. But
speaking about going and visiting the mines, is that something you do with the majority, with a lot of your holdings?
I'd like to do that. Yeah, I do that. I did go up to the Simberi mine in PNG. I am a bit wary about going to some places. I've got a small family. I've got a small boy, and I don't want to die on the job kind of thing. But yeah, it would be good to go out to the mines. Maybe I'll send one of the junior expendable members of the team out there.
Very good. Now, back to the portfolio and back to home here as well, because what some people might not know, it is a global portfolio, and you as a manager include Australia in that. One of your holdings is Vocus. Now, not too long ago, of course, TPG, Vocus, they had quite steep falls in the market. Tell us about your particular view on Vocus, your holding there, and what you're doing with it going forward.
We have held M2 for a long time, which is one of the parties of the merger which has formed Vocus now. Vaughan Bone, we've known for a long time, and he's an absolutely brilliant operator, so he's part of the top leadership team of that company. We did sell some stock at the high prices, and we have actually been buying stock very recently because we do believe this is a temporary blip. We don't believe that they're affected to the same extent as TPG has been by cost increases. And there has been some management change there and turnover, but we again think that's a short-term thing. So we're pretty happy and comfortable with where we are with Vocus, and this is a great buying price compared to where it was quite recently.
Excellent. Now, speaking of shares, let's talk about your own HHV. In the past, it's traded at quite a substantial discount to NTA, and to try and fix that, you've bought back a whole stack of shares over the years, about 230 million shares. That did not move the needle.
Yes.
In the last 18 months, the share price has really closed in on the NTA. What, in your opinion, has driven that?
Well, the numbers are we had issued 470 million shares and we bought back 230 million. So I think we've had more buybacks than any other LIC in Australia. But I have now got religion on dividends. And what the objective of our LIC now is to pay a regular, consistent stream of fully franked dividends. And it is amazing. That is the magic button with LICs. It used to be that you'd have bonds for income or property rental for income, and equity was supposed to provide you with capital growth. It's now flipped over, and now people are looking to equities, and in particular LICs, for income streams. So we've got religion on that. We've got a substantial bank of profits. So I think we're going to try very hard. Of course, you can't guarantee anything in the markets. Things go up and down. But we're going to try very, very hard to pay a regular, consistent stream of fully franked dividends.
Excellent. I'm sure that's music to shareholders' ears. So, Peter, thanks for joining us. And members, we'll catch you next time.